Hey, happy Monday to everybody here. It's time for Trader Talks in today's market. My name is Brent Moores. I'm just sitting in for Kevin Horner today, but I'm glad to be with you and kick off the week. And we'll see what the week brings. I don't know for sure, but last week actually we finished off pretty strong. I'll tell you all about that in just a sec. Um, Before I get too far into this, though, let me just mention this. I'm going solo today. And I'm joined by Scott Thompson in the chat. So he's helping me out in the chat. As you have questions, feel free to type those in the chat between Scott and myself. We'll try to get to those questions. And I just appreciate you. I see some familiar names in the chat. I'm not going to try and name everybody's name here. And if you're watching on a recording, hey, we love you too. We're grateful to have you. You can follow me on X, formerly known as Twitter, at Brent Moores CS. And by the way, let me just hit a few disclosures here, then we'll get through to what we're going to be talking about here. The information today is for general and informational purposes only, should not be considered an individual recommendation or personalized investment advice. And let's see, Schwab does not recommend the use of technical analysis as a sole means of investment research. Past performance, that is no guarantee of future results. And all investing involves risk, including loss of principal. Virtual currency trading involves unique and significant risks. All investors, so just keep in mind the risks involved, and there's no recommendations here. We'll be looking at a bunch of different individual stock symbols today, because that's what we do in this webcast. And they're not recommendations. We'll look at we'll start off with the general markets, the general trends of major indices, and look at individual sectors, and look at individual stocks that are in the news. I'm just trying to keep you up to date as we're kicking off a new week. So here's what I'm going to do. I'm going to start off with S&P 500. I'm going to follow Kevin Horner's lead. He normally starts off with the S&P 500. And I'm going to do that as well. I have a 50 and a 200-day moving average. Excuse me. I have a 20 and a 50-day moving average on here. And so just to orient yourself, the 20 days, a little bit shorter term moving average, that's in red. 50-day, a little bit more of an intermediate term look. But you can see the trend on the S&P 500 has been strong, in fact, strong enough that we hit an all-time high on that S&P 500 on Friday. So I don't know what today we're a little bit early in the day to know how we're going to end up right here. But, yeah, we hit an all-time high there. We hit one back here too. And I guess before that we were back in October, but along the way we've hit them. And we've hit higher lows too. So that trend has been continuing up. So would it surprise me if on what we saw was, if you're looking back at the past, how it goes up and down and up and down, that if we kind of do the same thing, up and down and up and down here, no guarantee this may go up, or this may be the end of the trend and it may go way, way, way down from here. But the general approach of trend traders is, as long as the trend is going your direction, we're going to assume that it continues. That's the approach of trend traders. Now, there's different approaches to the market. You don't have to do it that way. But if you're going to take that approach, most trend traders would be relatively bullish from a technical standpoint on the market here. Okay, so now having said that, let's do this. Let's look at today's action. We're just kind of starting off the day. I'm going to go just to a one-day chart. You can see where we are right now on that one-day chart, how we gap down a little bit lower. Now, this looks terrible, but given the longer-term view we just looked at, put it in a little context that this sort of stuff happens. If we throw on pivot points on this, let me zoom in here a little bit, it gives us potential support and resistance level. Here's your pivot point. Here's your S1 level, support level. And so for intraday traders, and I'm emphasizing intraday traders because longer term traders, or kind of not intraday traders, may not be that big an issue, the intraday drop here. But intraday traders, this would be a key level if we broke below that as a support level, or optimistically, hopefully, breaking above that. Potential target, potential exit on the downside there on that, okay? So there's that. That's the S&P 500. S&P 500 was up 1.6% last week. Okay, now let's move forward. I'm going to go to the NASDAQ. So the NASDAQ was not up 1.6% last week. It was up 2.2% last week. We are not at all-time highs on the NASDAQ. In fact, we kind of see, I don't know exactly how, I would consider this probably a little bit of a resistance level right here. Maybe not the most strong resistance level in the world, but we have hit off there. I'm going to call that once. I'm going to call that, even though we were just a little bit shy, that's the general area. We're going to call this an area of more resistance. And right here. So this would be kind of a bigger level to break through to continue the uptrend, but I would indeed call this a continued uptrend. In fact, what I would do is I'd probably draw a support line just like that and say, that's an ascending triangle on the NASDAQ right now. What does that mean? Well, first of all, when we talk about price patterns, ascending triangles, double bottoms, cup and handles, typically if you analyze them, they just break down to support and resistance levels. So we have a resistance level right here, okay? We have a support level, a diagonal support level here. Which is it going to break? If we break the resistance level, we'd consider it to be more of a bullish move. If it breaks the support level, we'd consider it more of a bearish move. But just kind of going into it, this pattern, this ascending triangle pattern, a lot of people assume that it will break to the upside, but we just don't know on that. We'll have to wait and see on that. So the NASDAQ up 2.2% last week, and candles maybe a little bit stronger. If I go to that one-day chart, I'm not going to spend too much time on this. Look at the recovery, the difference we've seen on the NASDAQ this morning versus what we saw in the S&P 500. Now, the S&P 500 may follow suit for all I know, but open down lower, but the minute candles are increasing fairly strongly. Let's move forward here, and I'm not going to spend too much time because what we say on the Dow often is pretty similar to what we say on the S&P 500, and the chart on the Dow basically is same upward trend, all-time high. Earlier last week, I don't know what day that was exactly, but Dow was up 2.3% last week. Now let's go to one that's a little bit different. Let's go to the RUT. The Russell 2000 are small caps. Okay. Now I said the Dow and the S&P 500, both large cap, so a lot of similarity. This looks very different sometimes. Small caps, all-time high on the Russell 2000 as of Friday, and last week, these other indexes, these other major indexes were up about 2%. The RUT was up, the Russell 2000 was up about 4.6%, and you can see the strength in this. Now, the same thing I said earlier holds. Once you get a strong move up like this, often you get a consolidation or a retracement, or we can kind of call it a flag or something like that, where it pulls back. That wouldn't surprise me. But right now, we've had pretty strong upward momentum on that. So that's the Russell 2000. That tends to be more interest rate sensitive. You've probably heard us say this before. And part of that's just going to be what do interest rates look like? Here's what interest rates look like right now. They've been creeping up a little bit, which would tend to hurt the Russell 2000. So far, that hasn't affected it of late too much. Let me do this, though. I'm going to draw a line here and say that's kind of an area of resistance. Okay, kind of an area of resistance, almost 4.2% on this is the 10-year. If we look down here and say, well, look, around 4%, and these are going to be real general. And when we talk support lines and resistance lines, they're not lines or points exactly, they're areas. I should more properly call it a resistance area and a support area. We've seen interest rates ticking up, but they've still kind of stayed in this area above it. This would be a significant break above this, okay, if interest rates continue to go up. This, on the other hand, if we go down, this obviously probably wouldn't happen in a day or two just because of how far it would have to drop, but you never know. This would be a significant breakdown here too. So we're kind of in this channel, this comfort zone, if you will, on the 10-year. Now, is that going to change? I don't know. We do have, part of that's going to be on economic data, economic performance that comes out. This is the CME FedWatch tool. So this is a third-party site from the Chicago Mercantile Exchange. And it gives us what the market's pricing in as probabilities of a cut. The next meeting, January 28th. Right now, this is the current rate, current target rate. And this is in basis points, so you would move it over 3.5 to 3.75%. Now, you go, that's different than the interest rate we were looking at a minute ago on the TNX. Well, this is a short-term rate. Okay, this is a short-term rate. They're not the same, and they don't go the same direction necessarily, but there is a general correlation. Sometimes that gets broken. There's a general correlation between the longer-term rate and the shorter-term rate. Right now, what the market's saying, and that's a key thing, what the market's saying, because we don't know, I don't know what it's going to do, is that there's a 95% chance that we're going to stay the same, that the Fed's not going to do anything come January 28th. Now, who knows? That could change with economic data. How would it change? Well, if the more weak economic data comes in terms of things like, say, labor, then that would kind of bolster the case for a rate cut. Now, we were just looking at January. There may not be a change in January, but looking further in the year, I'm not going to take the time to do it right now, that would increase the odds of more rate cuts later in the year if we have weaker labor reports or higher unemployment, or weaker production reports. We have an industrial production number coming out on Friday. Okay. Conversely, with inflation, if we have higher inflation, well, when do we get inflation reports? This week. Got CPI tomorrow. We've got PPI Wednesday. If those are poor or higher inflation, nobody wants higher inflation, okay? If those are higher inflation reports, it kind of it discourages the Fed from cutting rates, because that could kind of increase inflation if the Fed starts to cut rates a lot. So it's this kind of balancing act. That's what they call the dual mandate of the Fed, trying to balance inflation and economic activity and labor there. And it's a balancing act sometimes. And sometimes it's a tough balancing act. Sometimes it's more clear-cut and sometimes not as clear-cut. But those are some factors that could affect this interest rate right here. All right. Now, just for completion, I talked about some economic reports this week. Retail sales report is coming out Wednesday. Fed Beige Book is coming out on Wednesday as well. Not always the biggest reports, but they could move the market depending on the amount of the surprise. Now, another thing that could certainly affect the market this week is we have the earnings season kicking off tomorrow. What's today? Today's the 12th. This is just the S&P 100 here. So if you're looking at a stock you love that isn't on here, you can do that. You can always narrow this down. If I don't have a watch list selected here, I mean, it'll show every stock, but then it gets kind of noisy, so to speak. I'm trying to just look at some of the bigger stocks. But look, we have Bank of New York Mellon, we have JP Morgan, Bank of America, Citigroup, Wells Fargo, BlackRock, Goldman Sachs, Morgan Stanley. Do you see a theme on those? Those are all financials. That's kind of how earnings season, we kick off with financials, okay? But, these can individually affect the market. Usually any one stock isn't going to have that big of an effect. Maybe NVIDIA or Apple or something may. We don't have that on here right now, this first week. But the sum total of these earnings reports can affect the market. It is best for the economy, probably goes without saying that if earnings are strong, that tends to help the economy. And one of the reasons is it can help market valuations. Okay? How does it help market valuations if earnings are strong? Well, if you have a standard market valuation of, say, what we'd call a PE ratio, where we look at the price of the market, price of an individual stock, or as a group, everything, and we have the earnings. If the earnings goes up, that is, the denominator goes up with good earnings reports, that tends to lower the PE ratio or lower market valuations. So we're all rooting for higher earnings across the board there. So that's something to keep an eye on there. Now, let me just show you, I want to show you something here. Some of you are interested in looking at the market or doing scans and trying to find stocks to potentially invest in, okay? And we're not suggesting any stocks here, but let's say you're creating a scan here and you go to the Stock Hacker and you go, well, this is my scan, but you know what? I want to avoid earnings. You can do any scan you want here, but you want to avoid earnings. You can take your existing scan and make it so that you're not going to see any stocks that have earnings coming up on it. You want to do that? Similarly, you can make it so that you only have stocks that have earnings coming up on it. Let me show you how to do that, because I think it's important when we talk about earnings season, and I hear it all the time as I teach different webcasts. Well, there's earnings coming up. I don't want to do the trade. Fair enough. There's times you don't want to do a trade perhaps before earnings. That's okay. Sometimes you want to do a trade before earnings. If you want to avoid earnings, and this is only going to work on the live platform, not on your paper money platform, okay? Because you're going to go to a filter where it says add filter. And you're going to go down to study. Okay? That's where it needs to be, the live platform, because it's not going to allow you to use study filters otherwise. You go to where it says study, add that on there, and you look at them and it says corporate actions. And you go to earnings. You click on that and it says earnings. It has an earnings announcement anytime in the next 10 bars. Well, I'm going to say, no, I don't want earnings. It does not have an earnings announcement anytime in the next, well, we'll say 20 bars here. Okay, you can pick your time frame. Now, what's a bar? A bar is a trading day, basically, a trading day here. And I'm going to click on scan. And I'm going to run my scan. And it's thinking, and it came up. And it's excluded all these. Now, if I run this search, okay, let's do it without this for a sec. Let me delete this parameter on here, and let me rerun that. See what we got. We had 4 results before. Oh, we got 28 results. That tells you how many stocks have earnings. Now, another way to do this is you can always run your scan and look over here, and if it has that little red and blue circle next to the stock, that means earnings is coming up here, okay, very soon. But this, by adding the scan parameter, which I just showed you how to do, it's not on, I deleted it, it allows you to control the time frame. You can say, well, in the next month, I don't want any earnings, or the next 5 days, or whatever you want, okay? So just wanted to show you that on there as a way to empower you as you're doing trading. Now, let's look at some different aspects of the market, because we're seeing some things on the market. One, we've got I'm going to talk about some futures products here. We're just looking at the price of the commodity. We're not talking about futures today. If you want to learn about trading futures, if you actually want to trade futures, we have a webcast on Tuesdays, 9:30 Eastern time, called Trading Futures. So we're just talking about, in this case, the price of crude oil. Well, here's the price of crude oil. It's kind of ticked up a little bit. You know the news that happened on Venezuela. We also have the news that's happening in Iran too. Well, last year, Iran says they have total control of the country. They're kind of emphasize that, and that maybe eased oil prices this morning here. So oil prices have come down a little bit. Crude oil prices have come down a little bit. Yeah? And so there we go. But, all in all, hey, I filled up. I was driving through the middle of Utah yesterday, and I saw a gas station that had oil or gas prices at $1.99, under $2. Okay. Now, around where I live, they're not that low right now, but they're low. I imagine they're low relative to your area, wherever you're at. Now, there's more to gas prices than just the price of crude oil. Okay, there's a spread between there's the cost of refining, put it that way. That sometimes there's not a direct correlation there. But right now, from what I've seen, gas prices at the pump are pretty low, and you can see that in the price of oil. Now, other things, other commodity. Now, so before we go on this, let's do a little technical analysis here. We have a downward trend. Okay, we have a downward trend, and lower highs, lower lows for the most part. A higher low here. Okay, we do have a higher low here. We have breaking above a high. Would I call this an upward trend at this point? Probably not. But, we're maybe in the light has turned from green in terms of downtrend to yellow in terms of, we're starting to see some warning signs here. Warning signs of, I guess, depending on whether you're bullish or bearish, good or bad, but of maybe some things changing. But of course, this is very geopolitically driven, the price of oil right now. In fact, right now, I'd say that's the biggest issue right now as to the recent move up. So depending on how Venezuela, Iran, possibly other things go, it could certainly change this. Right now, though, hey, look, for the most part, we call that a downward trend, I think. Okay, so that's oil. Let's move on. Let's look at the price of something else. Let's look at gold, different asset classes. Here's gold, all-time high, yet again, on gold. Trend is up, yet again. Would it surprise me if we had a pullback? No, it wouldn't surprise me after the run-up we've had, but again, depending on events. So there's some news. Okay, some of you may have heard the news this weekend. Okay, so the news here we're talking about is the Department of Justice has initiated a criminal investigation of Chairman Powell. Okay, I'm not getting into any politics here, but that may be one of the forces driving up gold today. Okay, I don't know how it's going to turn out. I don't know much about it. It's regarding the whole what do you call it? The construction of the federal office buildings, and so that I'm not going to get into detail on that, but that it may be responsible. I mean, there's a lot of factors in there that may be responsible for pushing gold up. Okay, now another thing in the news. Actually, before I get to the other thing in the news I want to talk about, I want to talk about another asset class. Okay. Again, we're not talking about trading it. And just keep in mind, I'm going to pull up Bitcoin here, but just realize that digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Okay. So here's Bitcoin. Well, people keep an eye on this. It's kind of, this is the biggest player, so to speak, in the crypto space. And let's do a little technical analysis here, okay? We kind of hit that low down there, about 85,000. Right now, I would probably consider this around 95,000. This is kind of a range, so to speak. Chris said it's in a range. I would agree. This is the range I would consider it to be. You could move your lines a little up or a little down, but 85,000 and 95,000 seem to be the range, the current comfort area. The approach, so we will see if it breaks above the high of the range or the low of the range. For I don't know what it's going to do, but I think it's important to talk about the asset class because it's a bigger asset class there. Now, I talked about gold already. I should have probably right after gold talked about silver, but what we can say about gold is largely true for silver, been driven up just even more, just even more. Now, let's talk about a couple other things here. President Trump over the weekend proposed he called to cap, I don't know that there was any specific proposal, but he called for a cap of credit card interest rates at 10%. Okay. And so let's look at Visa. Okay. Let's look at Visa. Visa is down almost 3% today. Probably not a surprise. You can see how that would be a negative news story for Visa. And I suspect if it actually came to fruition that it would probably get hit even harder, perhaps. But, you know, when news stories comes out, there's always an uncertainty about it. By the way, if the quick tangent here, sometimes you'll see a company's news reports of a company being bought out at, $40 a share or something. And so the stock jumps up, but it doesn't go all the way up to $40 a share. And you go, why? If the company is going to be bought out for $40 a share, why wouldn't it currently be trading at $40 a share? There may be a difference there sometimes because there's uncertainty of whether it's actually going to go through. Would it be the same case here? I don't know. But that seems to obviously has negatively affect Visa. Okay. MasterCard, I would assume, I haven't looked at it. I assume it's to be the same thing. Yeah. MasterCard, same thing. All right. So there you go. So that's other news to start your week. Other news to start your week. Alphabet. Okay. Alphabet has reached agreements with a slew of different companies. Okay, on using their AI, their Gemini in different applications. Some of those companies are Kroger. Okay, is one of those. Yeah, nice little jump up on Kroger, up 3% today on Kroger. So they announced an expanded relationship with Google Cloud. That's Kroger. Okay, let's look at another one. Let's look at Honeywell. Honeywell, not reacting that much to this. Honeywell announced the launch of an AI-enabled retail solution developed in collaboration with Google Cloud. Okay. Honeywell, by the way, nice. That's the start of a trend. Probably had a downtrend back here from a technical standpoint. But at this point, we have clearly a series of higher highs and higher lows. We had a 2050 crossover. Now, you could do 1040 and you would have had a crossover as well. Okay. Probably change your moving averages. You probably have a crossover there at some point, unless it's a really long-term moving averages. But you can see the bullishness from a technical standpoint on Honeywell. Let's look at Walmart. Here's Walmart. Walmart's up almost 2% today. Walmart and Google, or Alphabet, share plans to launch a new experience that pairs Google's Gemini with Walmart and Sam's Club's assortment to make shopping time more intuitive, reliable, and perfectly aligned. This is a quote. Intuitive, reliable, and perfectly aligned with the rhythms of everyday life. Okay, that's a quote from the company. So I don't know how it's going to affect your shopping experience, but the market seems to like it. And that's what matters. Okay, I don't know enough about the experience to tell you whether it's going to be good or bad. Just like a lot of times I'll look at an earnings report and on the surface, I can't tell whether this is good or bad or not. That's why you look at the market reaction on there. Okay, so let's go forward. There's more. We looked at Kroger. Here's Papa John's. Okay. Normally I'd say I'm hungry after talking about this, but it's early, so it's a little early for pizza for me. Papa John's announced, and this is another quote, transformation of its digital ordering experience designed to deliver speed, accuracy, and real-time personalizations to 150 million plus customers worldwide. Okay, that's from the company. Market is a little bit tepid in its market reaction on there. One more, another Google Alphabet collaboration, and this is, again, it's another AI collaboration between Lowe's and Google. Okay, let's see how much time we have left. We have about 15 minutes left. So I want to talk about upgrades, downgrades, and sector action here. Let's look at some companies that have upgrades. Okay. And this obviously can affect the market. Applied Materials. What is Applied Materials? Applied Materials is a semiconductor equipment maker. And let me just find the specific upgrade that I have managed to lose here. Susquehanna upgraded Applied Materials to positive from neutral with a price target of 400. Listen to this. Their new price target is $400, up from $180. Talk about like a complete 180, man, from $180 price target to $400. So whatever they saw, they like, man, Susquehanna. And so Applied Materials up 2.5% today. Okay. So that's kind of a, you wouldn't have, it actually was breaking out before the upgrade. But that's your kind of flag pattern. Goes up. So when I talk about a flag pattern, I'm talking about this. Goes up, pull back, and then the breakout. That's your flag pattern. It's a bull flag. You have bearish flags as well. But let's look at A, B, and B. This is another upgrade. Market's not thrilled with the upgrade. B. Riley upgraded Airbnb to a buy from a neutral. Price target up to 170 from 140. Okay, so they had a 140 price target. They just moved it up there. Other companies with upgrades. Datadog. Well, this is one that we see, and very often the upgrade occurs after the stock's already gone way up. Well, this is one they upgraded after the big pullback. Well, maybe it's gotten cheap enough for them at this point there. That's Datadog. There. Morgan Stanley upgraded a Datadog to overweight. And let's do maybe two more quick upgrades here. And then I want to look at sectors. Here's Comcast, CMCSA. It's Comcast. Nice little reversal of the trend. You can see, again, we had that downward trend. Probably probable support level here in this level. There, okay? That's your probable support. Before today, I would have said, this is, hold on. No, maybe not. I don't know. This line may not be perfectly straight, but I think you get the gist here. This is probably a reasonable resistance level. We'll see if we hold that, but that's a break there, it looks like, on that. And one more. Let's go to ConocoPhillips. Okay, so kind of in the oil, gas. We saw gas prices, oil prices earlier. General trend up, upgrade from, let's see, from equal weight to overweight. Okay, initial, again, it's a positive element there. We do have downgrades. Not everything gets upgraded. Here's a couple downgrades. CRWD, CrowdStrike. Okay, CrowdStrike, as I think a lot of you will know, is a cybersecurity firm, and they've been in a downtrend. Lower highs, lower lows, and so down 1.5% today. And let's go to Snowflake. Okay. Okay. Probably kind of a key support level here, I would say. Today we're down about 1%. That was a downgrade from Barclays to equal weight from overweight here. All right. So let me go and let's look. So Rocco brought up Palantir. So I did not mention Palantir. Keep in mind, if you're ever wondering about this and you're looking at upgrades or downgrades, you can always go here to live news. It's just a gadget. I have it linked, so I have this orange 7. Just make sure they're both the same color number. It doesn't need to be 7. And then you can see Citigroup upgrades. I did not mention Palantir. Thank you, Rocco. I appreciate that. So you can always see that right there, and you can read where it came in. And this was kind of a later one that came in after I got my news there on that. So you can see that so far, market up 1%. So nothing to sneeze at. Let's look at some sector action here, though. Let me just make sure I've covered what I wanted to cover elsewhere. Oh, one other thing maybe I should cover before we get to sectors is the VIX. Okay, so VIX, just looking at market volatility, been creeping up lately. You know, Venezuela, Iran, that may have affected this a little bit. Started, into the year, into the holiday season, trading wasn't doing much there. Well, it's creeping up a little bit, but we're up about 6.5% today. Yeah, on that. Off the highs though, on that. We were up higher than that. Okay, let's do this. Let's switch on over and let's look at sectors. So here's healthcare. And by the way, just for clarification, we've got our graph here. This is a 3-month graph. And at the bottom of the graph, I have relative strength. It's relative strength. Relative strength is how well this sector is doing compared to the S&P 500. The way you interpret it is if this green line is sloping upward, like it was here, for example, then we'd say it's outperforming the S&P 500. If it's sloping downward, like it was here, we'd say it's underperforming the S&P 500. This is the starting point of 3 months ago, and you can see where it would be. So all in all, it's gone up over the last 3 months, okay? But one nice thing about this relative strength isn't just, hey, we're up over it was 3 months ago. We can see, well, it's a story of different times. It was doing better, and now it's doing worse, and right now it's kind of average-ish, so to speak, for healthcare. But from a technical standpoint, we do have a trend up. We have lows, higher lows, higher lows. Will this stop here? Will this bounce here? I don't know. Right now, and when you're interpreting an individual candle like this, even if we're down a little bit, about 0.2% roughly, it kind of matters what it looks like in terms of the interpretation. If we if we close near the bottom of the day, generally that's, now obviously we have many hours left to go in the trading day. So this will probably look very different by the end of the day. But if we close right near the bottom of the day, that's kind of a bad sign, typically, is how it's interpreted. If we close near the top of the day, that's a good sign. So let's say we have a stock. Stock's going along, okay? These are supposed to be candles I'm drawing here, okay? And then we have like a really big down day. But we close right at the top of the day. I'm not going to say it was a good day because it was a down day, but it gives you more hope than if instead the candle looked like this, where we close near the bottom of the day. That would be a bad news. Similarly, just opposite on the if we have a nice big gap up. Okay, let's move on and look at some other sectors. That was healthcare. Here's financials. Nice upward trend on this. Little bit of a pullback here. They were weaker, but of late, from this point, from say mid-November, it's been outperforming the S&P 500. Financials probably getting a little bit hit today with that credit card news that I mentioned earlier. Probably not helping the story that much there on that. Infotech, kind of just so-so. A lot of times this is the driver of the market up or down, but of late, technology has been kind of, I mean, technically you could probably draw, let me go, stop. You could probably draw that, but not going very far, very fast there on infotech, on IT, okay? So let's keep on moving, okay? Here is communication services. A lot more strength here. Nice upward trend. Is this potential resistance here? Yeah, that's potential. No, I wouldn't say it's super strong resistance there. Super strong resistance. But it is, so that'd be a kind of a key break level. But right now, of late, we've been going up. Yeah, I can share this sector grid here. So let me just do that real quick before I forget. Here is the sector grid. We'll call it that. Share. I'm going to put this in the chat. And then what I'll do is I'll also throw it in the description to this webcast after the webcast is done. And so if you're watching on a recording, you'll be able to look back in the description of this and you'll have that, that sector grid if you're interested there. So communications, strength, that's probably kind of a more key level there on this. Now, utilities, not so hot here on utilities. They have been declining. The interest rate, we talked about interest rates earlier. Interest rates, we said interest rates were kind of range bound, but they've been kind of creeping up to the upper end of the range. Probably not helping utilities here, to be very honest, on that. So that's been a little bit more bearish. Real estate, again, kind of, it had a bad period lately. We've been a little bit more sideways, certainly not looking very bullish from a traditional technical standpoint. And here's the S&P 500 as a whole. We've already looked at that. Don't need to look at that again. And energy going up. AI demand, does that bode well for energy? Materials, very strong. Well, we looked at some materials. We looked at gold, right? Silver. Yeah, those are going strong. Materials as a whole, of late, probably the top performing sector maybe. And in fact, let me just do this. Let me get through this. Industrials, very strong of late. And discretionary, strong. Staples, 3 days of strong. Before that, not much. Okay, let me just finish up. And I think we started with healthcare. So let me do this real quick here. I'm just going to bring up sectors. I have 2 columns here. These aren't custom columns. These are ones you guys can just add on your own. This is a percentage change column. Okay. This is a percentage change column for today. This is for the last month. If you want to add this, and I'm just about out of time here, so let me just finish up with this. If you want to add this, you can go to Customize, Percentage Change Since, and then go over and you can add it and you can change the time frame on that. But you can see over the last month, materials has been the strongest sector. All right, everybody. I am out of time. How did I get this on the chart? It's a script, okay? But I shared the chart with you, so you can use this grid if you want, and it has that on there already. All right. Hey, everybody, thank you for joining me. Thank you, Scott, for helping me out in the chat. And everybody, I hope you all have a wonderful week. Please subscribe to the Trader Talks channel so you don't miss future webcasts. And we'll be back tomorrow morning with trading futures at this time. But in the meantime, thanks for joining me. Thank you so much for joining me. And we'll see you all down the road. Bye-bye, everybody.